It's called diamond hands, man. We don't
Yeah.
sell. This is what we're looking at. This is the S&P. We've had a rough couple of months, man. February and March, again, have just been tumultuous.
Well, what's funny is like the trend is still clearly up.
These are daily candles. And if you just go back and look, this is 1 year. This is where we were roughly a
Okay.
year ago today.
Imagine you didn't know this last year happened and you were asleep for a year.
Right.
Look at the peak of that. Where was that peak at? 33,
Here?
30, thirty four
Here?
hundred. Yeah.
Yeah. You
30.
were asleep for the last year, right? If
So
you fell
you,
asleep on February 20th.
no, no, but look at that. Let's say you rode the peak up and you're like, oh, the market's doing great. And then you're like, I'm going on a vacation for a year and I'm not paying attention.
Right.
And you wake up today, look where we're at. We're at 4,000. You would have thought it was a great year. You wouldn't
Yeah.
think of all this volatility
Right, right,
happening.
right, right. Right. Like
So
so, what's the name? Sleeping Beauty wakes up after a year and checks her portfolio, and she's like, "Oh man, that was gangbusters year, man.
amazing. I'm 40% up.
I'm 40% up."
This gets to show you that obviously, one, just holding and not being so concerned daily with the price movement.
Right.
It honestly, you can't time these bottoms and tops. So why are you going to sell out and buy into every position every single time it moves 10%? That's
Right.
I think that's insane. I don't think you'll ever time it right,
No,
honestly.
and I also think, every time you make a trade, it's a taxable event and it's a time for you to lose. It's a chance for you to lose.
I'm just curious, what is the upside if
You're
you just
still
close your eyes?
you're still up 17%. Oh no. Yeah, up almost 18%. 410 days, up 18%.
And the stock market usually considered if you're doing 8 to 10%, you're actually doing really well
Yeah.
compounded yearly. So
Yeah.
if you're up 17, 18, 20% without just closing your eyes, not doing anything. But this is also shows you why it's important that when something goes down, if we're talking philosophy here, when something goes down and you do like it, like the S&P, this is a no-brainer to buy into the S&P, that you're buying into all the top 500 companies in the United States. The people who get so bearish on that everything's always about to crash and there's all these people that always come out when there's any volatility, it's unbelievable anymore if you actually pay attention to what's going on with companies in the economy. I just don't believe it anymore, all these
The thing
bearish
is though,
people.
if we didn't have those people, it wouldn't generate
The volatility of
the
it.
volatility and the dips. So that is what creates the buying opportunities. Because I mean, think about it. If no one sold anything if they like froze the stock market, we wouldn't have had the crash. It would have
Of
just been
course not. Right.
frozen. So
Right.
this is people going on E-Trade and Ameritrade selling their positions because of fear, and a lot of times that fear is due to lack of knowledge. The more knowledgeable
It's
you
all
are.
lack of knowledge, and also there's two things: lack of knowledge, like you're mentioning, and being over leveraged. So anytime you are completely in margin, then when everything crashes, you have a. I understand that fear of like you need to get rid of this thing because you might be in worse water if you
Oh,
don't
you
get
can
rid of it.
lose more money than you put in. I don't know. Let's just take let's take one of your favorites. Let's take Enphase.
Oh, I love
All right,
Enphase.
so you look at Enphase and you say, "Man, Enphase is at 152. Oh man, I was sitting on so much profit at 228." But this is literally like a chance to go back in time and buy Enphase when in December. So if you see that Enphase had no problem going from 151 to 227 in basically 2 months, right? That means the buyers are there. The confidence is there. This was a sell off based on what was happening in the market. But now you're getting a chance to go back in time and buy it here at 150 and watch it at least go back to 220. At least
Yeah, and the thing
increase your
is,
position.
what's important to know about this particular sell-off is that it's all tech stocks. It's not like it's Enphase or FUV or Tesla. It's literally every tech stock except maybe the FANG stocks. They're really not selling off. Like Apple's and Microsoft, they're going
Right.
down 1%, 2%. But the high flyers, they're all selling off. And look, obviously some of them are overvalued. I'm not saying that, but if you have positions that you actually think long term are going to kill it, like Enphase, for example.
Buy more as it continues to dip. Another thing that I think is happening, and we've talked about this before, if we look at the year chart, okay, this is where we were. This is the S&P. The bottom was March 23rd. We are now past the year. mark. I believe that there was a lot of people that bought some stocks and SPACs and a bunch of things. They didn't believe that the coronavirus was going to be a big thing. They didn't believe we were going to get shut down as they did. And then we did. And so they held. And I think we're coming up on the year of these people having held these positions, and they're just selling off now because they want to take their long-term gains. So there's a lot of people sitting on a lot of money. And I think the first sign, the first trigger, people are like, you know what? I'm not gonna lose this. When a big dip does come, you now have soldiers that are ready to go to battle, versus going into
Uh,
margin.
I agree with that, and that's why I sold my low conviction plays first. So that's why I got rid of the BNGOs, the Nano Dimensions, the Aquabios. Like I could keep going. I even got rid of my Salesforce, which I kind of like, but that's
Yeah.
not my high conviction play. If you have three, four, five conviction plays that you really believe in, you have to buy them when they go down. Otherwise, what are you doing, man?
Yeah.
Like, like you're doing the wrong thing in this market. As it's going down, you should be happy Tesla's going down. You should be happy Enphase is going down, or
Yeah.
whatever you have high conviction in, Planet 13 or whatever. If you're not happy, then you actually have no conviction in that play. You think it's going
Or
to fail.
or unless you already have the position. Like once I have my full position in like YCBD as an example, then I want it to go.
YCBD has ranged between, for the last year, approximately what, $2, and $4, $2 and $7 actually, right?
Well, let's just take a look. I mean, it was at a dollar. We were
There you
looking
go, a
at it around
dollar.
here.
We were buying it around $2. So it
We were
ranged
buying
between a
around
dollar
here.
and $7. So
You had 175 days
right.
to
Half a
buy this
year.
thing under
Right.
$4.
Yeah.
You had
It's
175
it's still
days.
$4. That's the thing. It's still worth buying. But
And here it is, right? I mean, it ran up, and this was really nice to see in the portfolio, but I was kind of sad because I didn't have the position that I wanted. And when it started coming back down, then I
right.
started buying again. And here we are.
This is my point in bringing this up, that okay, we have YCBD. It's sticking around almost for a year now at roughly between $3 and $4, or let's say $3 average, right?
Yeah, about $3 average.
So
Yeah.
my point being, I don't want to buy anymore because we have a lot of shares. We bought a
Right.
lot, but if it goes back to two, I'm a buyer again.
Oh, if it goes back to two, I'm a buyer again. And if it were to
Right.
ever come down to this level, if it would ever go to like under a dollar or whatever, I
Yeah.
think I would go in and I would probably double my position. You know what I mean? If they're a dollar, it's like you have to take advantage of that. If you were buying them at four, and
Yeah.
then your overall average is like one whatever, and you can actually sell a bit earlier and make the same money. Like if you
Yeah.
wanted to sell it earlier at a price, you can make more money, and that's something to
Well,
think about too.
what you're bringing up is a good point. So the reason we buy things when they go down is so we can get our cost average lower. This is what I don't get understand when I talk to a lot of people who don't, they get afraid, they
Right, and
don't
they
get
don't.
our cost average
Yeah, they don't
down.
buy. Yeah.
It's like you should be buying now, not waiting for something like a bigger dip. Like, no, you have to scale into these things because we don't know when the bleeding will stop. We have no idea. It could stop right now. Maybe today was the day it stopped because
That's the thing.
did a
It could
video.
be,
Because we did
yeah,
a
right.
video.
It could be us, right? But I mean, it would make sense if you bought anything
Oh yeah, yeah. That
on
last
March
message.
23rd. Right now, you're up 80%. You're up 80%, and you're up 80% without having paying long-term capital gains. I feel like all last year, the stock market replaced sports, and it
Oh
was
yeah,
just people having fun and betting, and it was like they didn't care about valuations. It was just riding it out. It was also a way to pass the time in the middle of the pandemic. But now it's getting serious. Now these numbers are serious. If you put $10,000 in, you're up 80%. You put 100,000 in, you're sitting on $80,000 profit. How do you not sell some?
yeah. And that's only the S&P. If you bought Tesla, you would have been up 15x.
Exactly. How do you not sell
Right.
some? In other words, it's like it can't go up forever. So we need these dips. We need these sells, these big sell-offs, so you can recalibrate and readjust your portfolio. Now my portfolio is, and around this time last year, my portfolio was like 5 positions. And then we started accumulating these SPACs and making some money. And right now I'm getting right back to those 5 positions again. And then
Right.
there'll
Back
be
to the
some new
core.
SPAC. Yeah, there'll be some new SPACs that come out. There'll be some new stuff, and we'll throw some money at those. But if any of those 1 to 5 conviction plays takes a massive downturn, that's the first one to go. When you said the high conviction stocks, these are the stocks that when you sell, it changes your life. If your price target was say, I want $1 million from Tesla, you've just dollar cost averaged it to a point where you could get to the million at $1,500 a share, $1,600 a share, $1,700 a share.
Well,
Maybe you don't have to wait to the
what you're
2,000.
saying is important. So you can do well in a bull market, which we have, okay? But the most amount of money was made in the bear market that lasted a month last year. The people who knew to buy the dip are the ones that made a killing. So
Yeah,
it's the same thing here. If your high conviction play is just tanked 50%, like FUV for me is tanked 70%. So what
it
did I do
hurts.
today? I bought more FUV. My point being, money is made, real money. We're not talking about the 10, 15% and then you
Right.
sell out. Real money is made when it's fucking bleeding. When
Mhm.
everyone's running out the door and you're running the opposite way. Both of us are learning in this journey. It's still a journey to learn how to invest properly. But this time when things fell apart, I used it the opposite way. I said, well, I see what keeps happening is that I keep missing opportunities when it's just falling and bleeding red. I
Right.
decided not to do it this time. I said, I'm just going straight into everything I believe in as
Yeah.
it drops.
Yeah.
And on the way up again. I mean, like, honestly, it's one of those things I just keep buying.
When you look at the 5-year chart, 5 years from now, these dips will not even register.
Right. It's going to be so far
It was
gone.
just going to be a freaking line going straight up.
It's like the people talking about, even me and you, Bitcoin at 10,000 or 12,000. Where should we buy?
Right.
It's $60,000.
Right.